Joining us tonight. My name is Jessica Medina. I'm a financial counselor and coach here in Alexandria, Virginia. And I'm joined tonight by the fabulous Paula Flagg. She's a realtor and local expert here in the DC metro area. She's going to be walking us through part 2 to our home buyer's guide. Hopefully you were here for part 1 where we went over how to prepare to buy your home. And now she's going to tell us how to actually seal that deal. Just a few logistics for tonight. This is being recorded, but we will ask you to save your questions until the end. Paula's going to save some time at the end so that you can get all of your questions answered. If something comes to mind and you want to pop it into the chat, I'll be monitoring the chat, but we are going to try to save questions till the end because we do have a lot of information to go through this evening. And also, if you would like to save your hand and not take notes, we can send you a copy of these slides if you send your email to Allison at Beatley Library, and we'll have the contact information for that at the end of the presentation. Or if you're comfortable and you want to pop your email into the chat, I'll jot it down and make sure you get a copy of these amazing slides. All right, Paula, thank you so much.
All right, awesome. Hi, everybody. My name is Paula Flagg. I am a real estate agent with Keller Williams, licensed in Virginia, DC, and Maryland. I'm so excited to be here with you guys tonight because teaching people, like educating people about the process is like one of my favorite things about the profession, and I love being able to help people. So hopefully you'll find it informative, and if you have any questions, anything specific, I would love to have a one-on-one conversation with you to answer those questions for you. So we'll go ahead and get started because there's a lot of content in here, and I want to make sure I share as much as possible with you guys. So we're buying a home. It's usually one of the things that people get excited about. They start telling everybody, whether you're buying a condo, a townhouse, like a detached home, new construction, you're looking for a rental property, you see a home down the street that's for sale by owner. Those are all kinds of houses that you may find that you're looking to purchase. And luckily we have all of those options here in our market. So something for everybody. There is a home for every buyer, and there's a buyer for every home. And it's kind of like what I get to do every day is bring those together. So we'll go ahead and, this is a picture just kind of like I know this is kind of small, but it's an overview of the entire process. I'll break it down a little bit smaller, but I wanted to give you an opportunity to see what the whole home buying process looks like in one snapshot. So everything from you're going to select a real estate agent that you're going to work with, through searching for properties, writing offers, getting under contract, and then the contract to close process where we go through contingencies, get your financing, and we check your title to make sure that you're going to get a clean title for your property, and closing where you get the keys. So this is what we're going to be discussing tonight. And then just to kind of zoom in a little bit, this is the first part of the process. So really the first thing that you want to do at the time that you think you may be looking to buy a home is to start doing a little bit of research on real estate agents, find a professional, start working with the real estate agent as soon as possible so that they can give you guidance and advice. I know sometimes it's really easy. We want to hide behind our screen and we don't want to waste people's time, or we don't want people bothering us when we're not really sure if we're ready. But it really is, there's nothing can replace like having an actual conversation with a human that is doing this on a daily basis. It'll save you a lot of time, a lot of stress, and the things that you read online can sometimes be accurate for one location and not accurate for another. Even in this small DC region where I'm licensed in Virginia, DC, and Maryland, the laws are different in every state. In Maryland, the laws are different in every county. So the information that you read online could be accurate for the location where the author is talking, but not necessarily accurate for the location where you're looking to purchase. So we'll dive in here just a little bit, just to understand the market right now. So like what's going on in the COVID-19 reality that we live in these days. I know a lot of people have probably heard buyers markets and sellers markets, and it's what does that really mean? So what we call a neutral market, it's based on inventory that we have available for people to purchase. A seller's market is when there is less inventory, less houses on the market than there are buyers that want to buy it. And a buyer's market is when we have more homes on the market than we have buyers. A neutral market is 6 months worth of inventory. So if 100 homes are selling a month, then we have 600 homes on the market right now that would be considered 6 months worth of inventory, and that's neutral. Less than 6 months is a seller's market, and right now we are working with about 1 month's worth of inventory, depending on the area. So we're deep into a seller's market. That doesn't mean it's not a good time to buy. It actually, what is creating the seller's market is because it's a fabulous time to be a buyer, because interest rates are so low. So that's why buyers are flooding the market so that they can take advantage of the super low interest rates. On conventional loans right now, rates tend to be around 2.75 to 3%. With government loans like VA and FHA, it's actually lower than that, like 2.25, 2.5%. So, so that's what is driving the market right now and causing us to be in such a seller's market. Again,
that's practically free. Oh my goodness.
It is.
That's like less than inflation.
Yes, you can actually, I mean, it's really smart right now to take advantage of this and get in the game. And these prices are available for just about anybody who is interested in buying a home. You can get a rate under 3% right now. Because of that, the average list price to sales price ratio in our market is 99.8%, which means that pretty much whatever sellers are asking for, they're getting. Sometimes it's a little less, sometimes it's a little more, sometimes it's a lot more. We're seeing those. So as long as it's priced appropriately and shows well, a house will most likely end up with multiple offers. If it's overpriced or it needs a lot of work or something like that, you may find an opportunity to get slightly less than the sales price or the list price. So that's kind of where we are right now in our current market in Virginia, DC, and Maryland, the entire DC region. So listing inventory really low right now. When the inventory is low, like it is, the demand for each house goes up. You know, people have a lease that's ending, they have a baby that's coming, they have a spouse they just cannot live with one more day. And, you know, they're ready for this divorce to be done. And so they're out there in droves looking for the house. Whenever there's not that many houses, people will start to like compete for them. So when the demand goes up like that, the prices tend to go up too. And that's what we have seen in this area recently. Highest median home prices, highest average prices, things like that in the market. So month over month, pretty much this whole year. And we're outpacing 2019 as well. So we talked a little bit about financing last time, but just this is like another slightly different take on it. You know, we were preparing yourself for taking on owning a home previously. Now this is where we actually get into the nuts and bolts of like the financing for your house and what's your financing strategy going to be. Are you getting a loan? Are you paying cash? Are you getting money from a family member? You know, what does that look like? Majority of buyers these days are getting loans. A conventional loan, you can put down 3% and get into a house. So on a $500,000 house, that's $15,000. Plus there are closing costs involved, but that's what you would need for the down payment of the house. Partner with a real estate agent first before you start going down the track of financing, because usually your agents, especially your experienced agents that are out in the field every day, they have lenders who can work with whatever your situation is. And every lender has different products and services. So if you're a first-time home buyer, there are programs in DC, Virginia, and Maryland where you could potentially do 0 down payment. Not every lender offers these. And if a lender doesn't offer these, they're not going to tell you you could go to a different lender and get those products. So a real estate agent is really going to be able to act on your behalf and tell you the best places for you to go talk to get the best loan for your situation. Some quick do's: work with a local lender, local loan officer. You should be able to have a lender's cell phone number. We should have that level of access to your loan officer, and they should work evening and weekends. We're going to be looking at houses on evening and weekends. We're going to be writing offers on evening and weekends. We need your loan officer to be available. So when it comes to banks that have call centers and it's an 800 number and you have to wait for customer service, it's not really ideal. And we're trying to do everything we can to position you to the seller and to the listing agent that they want to accept your offer. And if they can't reach the loan officer, if they're unsure of like how long it's going to take for the loan to close, if they think that the customer service is going to be lacking, then they could just discard your offer, even if the price is higher, because they're unsure about your lender. Don't use an internet lender for a purchase. So for instance, like Rocket Mortgage, Quicken Loans, like all of those, it's like super easy to just click on a button at 3 o'clock in the morning while you're browsing houses on Zillow to try to start that process to see if you're qualified to buy a home, but that's really not the professional that you need to be talking to. Talk to an agent, find out good loan officers for you to be talking to, and then talk to a loan officer who can go through the scenarios with you, look at your information specifically. There's no replacement for a human in that process to really show you what your options are. So you're also, if you're ever in a multiple offer situation while you're trying to purchase a house, you find the home of your dreams. If somebody submits an offer and they have a loan with a local lender like George Mason Mortgage or Home First, and you have a Rocket Mortgage pre-approval, they're just not even going to consider your offer. Now, those online lenders do have a place in the market. A lot of times they're great for refinances. So I'm not knocking them just in general. But there are certain things that you need to have whenever you're working with the purchase, and the customer service and then being able to deliver on time and being available are key. Also with appraisals, we want to know that the local lender has local appraisal management companies that they work with, and that the person that's going to do the appraiser is someone who is specific and local to that area. And when you're working with the big box companies, you don't always get that. So you could have somebody from Dumfries doing an appraisal on a house in Old Town Alexandria, and they don't understand all the little nuances of the neighborhood and why someone would pay $70,000 for a parking space or something along those lines. So that's another reason that you could snag the deal later in the process.
Paula, do you have a view on big bank lenders versus independent lenders in terms of who works better in certain types of situations or for certain circumstances, certain types of buyers?
Sure. I would say if you're considering things like Bank of America, Wells Fargo, the biggest challenge with them is they're slow. They also tend to have higher interest rates than the correspondent mortgage lenders. So mortgage companies do just mortgages, and people like Wells Fargo and Bank of America, that's just like one division, one arm. They're just offering it so that they can have additional, like they can offer the wide range of financial products, but that's really not their bread and butter. And so they don't focus on it the same way that a mortgage company does, such as George Mason Mortgage. You know, and that's just one example. George Mason is like, they're really great. They can close loans in like 21 days. They have super low rates. The customer service is outstanding. So that's a great example. And the funny thing is after you do a purchase with one of these mortgage companies, most of the time it'll be sold after the fact and end up at an M&T Bank or Wells Fargo or Bank of America for servicing. And so you get that big bank servicing experience, but you don't have to pay the big bank's interest rates. It's actually cheaper to go through another, it's called a correspondent lender, like the local mortgage companies. You'll get a lower rate, and then you'll get serviced by somebody like Chase or Wells Fargo, M&T Bank. Does that answer your question? Okay, perfect. So moving on, like with an agent, right? What does a buyer agent do? Like, why do you need one? Are we just here to open doors? And the answer is we do a lot more than open doors. We actually take on what's called fiduciary duties for our clients, which means we have to put the client's interest above everyone, including ourselves. So it's our job, it's our duty. We have a responsibility to make sure that you're informed, that you know all of your options so that you can make the best decision for yourself. One of the things that I will caveat in here for you is to make sure that you're working with a successful agent, somebody who's been in the business for a while and who is doing a relatively decent amount of business. One of the reasons that I say that is when you're working with a successful agent who is not worried about where they're going to, like their next paycheck or how they're going to pay their mortgage this month, then you can feel a little bit more comfortable that the advice that they're giving you is not out of personal desperation that they need you to just buy this house so that they can pay their mortgage next month. So that's just a little caveat that I put in there to make sure that you're working with a professional, somebody who is doing enough business that they're not really like tied or desperate for you to buy a home. It's important to establish a relationship with your agent in writing. We have buyer agency agreements, which will let you know exactly what a buyer agent is responsible for so that you know you're getting all the services that you're supposed to be getting. If you're not getting those services, the agreement can be canceled at any time. So there's no, I don't think people should be fearful of going into an agreement with a real estate agent, because if the services are not being rendered, you can cancel that agreement. You're not stuck, if that makes sense. But it does make the agent, give the agent fiduciary duties to you whenever you enter into that agreement. Work with an experienced full-time agent. Ask for their statistics, learn about their business, talk to some past clients, read their reviews. A lot of agents can smile and be nice, and you need somebody who smiles and is nice, but then also has some substance and can actually provide the services that you're looking for. So I would just add that in really quickly. Our multiple listing service and homes on the internet. So all of the agents, your buyer's agent, if you're a first-time home buyer, this may be something that you're not familiar with, but the seller pays your buyer agent's commission. So that's not something that you have to pay for. It's a service that basically you're provided for free. Not in that the agent works for free, but that somebody else is going to pay the agent. In this region, most brokerages have what's called an admin fee, and that will range between $250 to $500 depending on the brokerage. That is the only fee that you as a buyer tend to have to pay, and that's part of the closing cost. It's just added to the settlement statement whenever you close. And closing costs is an umbrella term that just means everything that you pay at closing that is not your down payment. So your settlement fees, the title search fees, any loan origination fees, transfer taxes, insurances, like your title insurance, things along those lines, any kind of prepaids, maybe your homeowner's insurance premium for the year. Those are the kind of things that will all get lumped into this one big term we call closing costs. And so basically all agents have access to the multiple listing service, the same information. And really what the biggest difference is in terms of service for agents is the speed that we can get that information to you, and then our ability to interpret it and tell you what the information means. So anyone can show you a really pretty chart with lots of colors on it, but can they tell you what those things actually mean and how it is important to you and your situation? So those are things to look out for.
Yeah, when I was buying my home back in 2011, one of the most useful things my agent did for me as a buyer was make his searches in the multiple service listings by school district. I told him which school districts I was willing to put my children into, and he literally drew the map around all of the different districts for all the elementary schools that I found acceptable for my children, because he kept sending me listings. I'd look them up and I'm like, oh, this is great. And then I would look up the school. I'm like, I'm not sending my kids there. And then I went.
Exactly.
So he went through painstaking detail to make sure that my searches, everything that he sent me, that would be a given. And it was such a huge time saver. It was awesome.
And that's not easy to do, to be honest. So like kudos to you. You had a great agent.
It was a tall request and he told me that. But he did it.
Awesome. So another thing that you'll encounter whenever you're looking for a home, I'm sure at some point, is a for sale by owner or a new home construction community, a new condo building, things along those lines. It's best that you never reach out to them directly or never go to the model homes on your own. Always talk to your real estate agent first and have the agent make first contact with those sellers. So if it's a for sale by owner, those sellers are always happy to pay a commission for an agent who brings a buyer. New home construction, if your agent goes with you to the model or is the one who initiates contacts and schedules the appointments, they will recognize the agent as your agent. And this really just ensures that you have representation for yourself during the transaction. So you don't want to get in a situation where like the new builder is like, you didn't have an agent when you came in here before, and now we're not going to pay this agent because they just showed up now. We're the reason that you decided to buy this house. And then if you want representation because the seller won't pay for it themselves, it would be on you to pay the commission. So it's if you want that representation. So it's just always in your best interest to talk to the agent first, have the agent reach out to the seller or to the sales office and things like that, establish that connection, and then you're able to have representation throughout the whole process that somebody else is paying for. And this is just a little side note. It's not necessarily related to for sale by owner or new home construction, but it is kind of in the same realm of things. Like never click on the send me more information, schedule a showing, send a message on the sites, because all of those little boxes for you to click on those links or for you to ask your questions, those are all advertisements that loan officers and real estate agents are paying a ton of money for to get your name and your phone number and your email address. And then they will continue to call you and call you and call you because they paid a lot of money for your phone number. And that's not always necessarily the agent that you want to be working with. You know, so just keep that in mind. Develop your relationship with a real estate agent. You can ask friends, you can go to open houses and just kind of, you know, meet people, ask them questions. Like, I'm happy to help as well. But definitely establish a relationship with a trusted agent first, because you don't want to be like just the person who like signed up and paid their $2,000 for Zillow, but they've never actually sold a house before, being the person that's calling you 10 times a day because they don't have anything else to do. In general, when you're shopping for your homes, the internet has helped tremendously. So on average, my buyers look at about 6 to 8 homes before they find the one that they're putting in an offer on. In the last 6 months, that number has dropped to about 4 to 6. I've actually, over the last 6 months, I probably 3 or 4 buyers who have seen one house. It was because the internet allows us to eliminate so many that don't work for us. We're only going to look at the best homes. The pictures, the virtual tours, looking at maps, driving through the neighborhood, whenever you see that it's coming soon or when it first hits the market, can eliminate a lot of properties. And so, and then there are not a lot left. And so you just go look at the ones that really meet all of your criteria. So it's great because one of the things that most buyers don't realize is that it's time consuming and exhausting. And after they go out on their first appointment, they're like, oh, they thought they wanted to see 20 houses before they made like such a major decision. And then after one evening of seeing 4 houses, they're exhausted and they're like, okay, I get it. And I know like exactly what I don't want to go look at anymore. So most people find this statistic surprising, but it really doesn't take going out to see that many homes in person anymore, thanks to the internet. The purchase contract that we use in this region, no matter what jurisdiction, it's a standard form that has been developed by the Real Estate Commission in that jurisdiction. So there's a lot of fill in the blanks. I usually give the contract to my clients, a blank version. At the time that we sign we have our consultation and all that stuff, sign our paperwork that we're going to work together. That gives you an opportunity to read through the contract when you're not stressed, when you're not like all excited about finding the home of your dreams. If you have any questions, I can get you in touch with a title attorney who can answer all those questions, and we can make sure that you're very comfortable. So when we do find the right home, we can fill in the information and move quickly to get that offer in. Because if we have to stop and ask a bunch of questions and wait for responses, we could actually lose the home. So that's just something to keep in mind. One of the components of the contract is what's called an earnest money deposit. So the earnest money deposit is a check that you write at the time that you're submitting an offer. It can be a wire that happens as well. But this money, if your offer is accepted, the check will be cashed. It's held by the title company, and it will be used toward your down payment. So this is kind of like good faith money that lets the seller know that you're interested, you're putting some skin in the game. It's usually around 2%, but it could be more depending on how competitive the situation is, how much we're planning to put down as your down payment, and things like that. One of the things that people sometimes forget is that this check does get cashed and it's held in an escrow account with the title company. And this, it's a fill in the blank. In general, it's around 2%, but again, it's like that's not something that's set in stone. If I have a client who's doing 100% financing, sometimes this earnest money deposit is $1,000. If I have somebody that's putting down 20% on an $800,000 house, like their earnest money might be $50,000 just to show how serious they are. So it really is kind of, that's the art of working with the agent and knowing what is important to the seller and the listing agent. So that can vary from contract to contract.
Oh, Paula?
Yes.
Going back to the earnest money deposit, is that something that you could lose if the transaction doesn't go through?
So that is money that you are putting on the line. We put contingencies into the contract to protect that money. And that's one of the biggest things that a real estate agent does, is protect that money throughout the transaction. So contingencies are basically like, we're putting in this offer, and contingencies are the options that the buyer has to walk away from the contract and get this money back. For instance, a home inspection contingency. If we have a home inspection contingency in the contract, it'll say like, we have 5 days to get a home inspection. And based on that home inspection, we can either ask for repairs, we can ask for a credit, or we can cancel the contract. We have 5 days to do that. So we can't do that on the 20th day of the contract. We have to do that within our 5-day window. Same thing with financing and appraisals. Usually the finance contingency that I write in a contract is 14 days. So you have 14 days to get the appraisal back to verify that the value is there. We have 14 days to get you through underwriting to get your conditional approval. And at that 14th day, if we're confident we're going to be able to get to closing, great, we move forward. On that 14th day, if you don't know if you're going to get your financing, there are two options. You can either cancel the contract to get your earnest money deposit back, or you can risk it. Sometimes, so there in Virginia, we have an option where the finance contingency is X number of days, but then it'll stay in play. Has an automatic extension. And then there's another clause that is like no automatic extension. So it will just expire on the 14th day. So it depends on the one that you fill out in the contract. But yes, this is my biggest job as an agent, is to protect this money. When somebody's putting down $50,000 on the line and they could lose it, like that, you know, that's money that basically is, I'm going to have to figure out how to repay if I screw it up. Right. I mean, cause I'm not going to let my clients like, take a hit like that. So
I would much rather have you protecting that 50,000 than me protecting that 50,000.
So, and it's so important to me that I also have administrative staff that I have hired, a transaction coordinator to help monitor all of that stuff. So, I mean, there's a lot of pieces to the puzzle, and we have to have, you know, make sure that and here are the contingencies that we were just talking about. It's the second half. So you're under contract. Now we have contingencies we have to work through. It could be inspections. We have the finance contingency, which requires going through the entire underwriting process, getting the appraisal, getting the survey and the insurance, like homeowners insurance, also title insurance. So your title company is going to go do a search at the courthouse and make sure that the person who's selling you the home is actually the seller, and that they have the right to sell this house to you. And they also that nobody else has ownership rights to this property, and things like that. So it's, we take these things for granted because we have really great companies and systems in place to protect people. But every so often, it comes up that there is a title claim, and if you don't have the insurance, then you're going to be stuck like with paying your own attorney fees, which, Jessica, how much do attorneys cost?
Oh, I don't make that anymore. It was wonderful though when I did.
So title companies are go through the process of making sure the title is free and clear of any flaws, any defects, any claims, and then they issue a title insurance policy that, unlike other insurances, you pay for it once and it protects you forever. It's not like it's something that you have to pay annually. And basically it just puts it onto the title company. If, like, you know, 3 sellers ago, somebody's uncle decided that they were entitled to that house and they came back to you now and said, like, this is my house, I am the rightful owner, then the title insurance company makes them go away and you get to keep living in your house. So that's how that works. So once we go through the process of checking all the boxes of getting through inspections and financing and title and, you know, everything that goes into that, then it's closing day. And in closing day, we do a walkthrough. We make sure that, like, no tree fell on the house, that the sellers didn't, like, take all the appliances with them, that they didn't bust holes in the wall while they were moving out. They didn't take all the chandeliers. You know, things like that happen. And so we do a walkthrough. We make sure that the house is in, and the contract says, substantially the same condition. And then we go to the title company, and it's about an hour's worth of signing papers. You're going to sign all of your loan documents. You're going to sign all of the legal county documents that transfer the property from the seller to the buyer. And the house is yours. You get the keys there at the title company. And that's that point you can make your plans to move in. So we're going to talk a little bit more on that. Like, so inspecting your home. These are the contingencies that we're going to go through. The inspections are really for major items only. So not necessarily for a drippy faucet, a loose tile, a rip in a carpet. This is for things that affect the functionality of the home or the safety of the home. So for instance, a leaking roof, functionality, and also could become a safety concern, water damage for mold or something. Crack in the foundation, HVAC system doesn't work, plumbing is backing up, the electrical panel is wired wrong, those kinds of things. Safety concerns could be like the windows don't stay up on their own, right? You put a window up, it falls back down. That could fall on, if somebody leans out, it could fall on their head and hurt them. It could fall and shatter, and like then they could get cut. So those are the kinds of things, like a missing stair rail could be something that comes up as a safety concern, even though it's not an expensive fix. But we are looking for major items only. In today's market, it's even more restricting than that. So usually if you have a home inspection, it's going to be for informational purposes only and the right to void. So the option to negotiate repairs or a credit is really off the table right now, unless you're working with a house that has been on the market for a while and there's not a lot of competition for that property. Then you could go in and you could add a contingency. They're just happy to get an offer. In a lot of cases, especially like when new houses come on the market, they look well, they're priced well. People are doing what's called a pre-inspection, where they basically get a home inspection done on the property before they submit the offer. And then they're submitting an offer without a home inspection contingency because they already know the condition of the property. So the pro of that is, you know what the house is. You're submitting a much stronger offer to the seller. The con is that you're paying for a home inspection and you don't know if you're going to win the contract. So you could be spending money on this house and not make it to the next step. So one of the things that we do, if you see at the bottom of the slide here, it says the home inspection is usually between $300 and $800, depending on the size of the home. For pre-inspections, we typically do like a 1 hour walk and talk consultation, and that is $300. And the home inspector will check all of the, the roof, the HVAC, the electrical panel, the big ticket items, the expensive items, but they're not going to go check every outlet. They're not going to open and close every window. There's going to be minor things that they're not checking that you may need to address whenever you buy the home, should you get to. But with a home inspection, this is not the time to cheap out. Spending, like your agent may give you a recommendation for a home inspector and they give you a price of $600, and then you go on the internet and you find somebody who will do it for $450. That doesn't mean, like, it's not like, oh, why am I going to spend an extra $150? Like, not all home inspectors are the same, and you get what you pay for. So spending that $600 to work with a quality home inspector who is really going to be able to find out what's going on in that house, that extra $150 could save you from a $30,000 repair that you get stuck with because nobody told you about it before you bought the house. Does that make sense?
Yes, it absolutely makes sense to me. I have heard that some people actually bring in multiple home inspectors, like they have a roofing specialist come in and check the roof. They have a plumber come in and check the plumbing, as opposed to a home inspector who kind of does, like, you know, everything because they're a one-stop shop. Mm-hmm. What do you have thoughts on that? Whether in the COVID situation where everyone's fighting over homes, or more normally, or maybe with older homes or things like of that nature?
What I recommend typically is to start with the general home inspector, have them come in and do everything. And then usually, I mean, their job is to raise red flags. And so I tell my clients all the time, like, they may say something is a potential issue that turns out to be not a non-issue. Right? So they may see something in an electrical panel and they say, I've never seen this before. And they'll put a note like, have a master electrician, licensed electrician inspect and make, you know, corrections as recommended, right? but an electrician could come out and say like, oh no, it's fine to be done that way. So it could be, you know, I like to work with home inspectors who will raise all of the potential red flags. And it could be like, hey, you know what, this roof probably doesn't have much time left, or there's a water stain I saw in the attic, but I can't tell that there's any issues on the, like on the outside of the roof. One, ask the seller if they've had any issues, because it's possible it was an old issue. Now we have a new roof, and that's just like cosmetically, you can just see where the leak happened before. Or they may say like, have a licensed roofer come out and take a look at the roof and repair as recommended by the roofer. So I recommend starting with the general one, and then they'll usually break it out like, you need to have a structural engineer look at this because the crack is more than 1/4 of an inch or something along those lines. And that I've had that happen before. And if we go a little further south, like in Prince William County, we run into houses that have wells and septics. And so those are usually separate inspections as well. So we have the general home inspection, then we'll have a septic company come out and do an inspection of the septic system. And then we'll have somebody come out and do like well water testing, water quality testing and things like that. It's usually separate. There is also like termite or wood destroying insect inspections that are typically separate from the home inspection itself. Lenders will require those a lot of time in freestanding homes that are wood construction. The appraisal of your home. So appraisal is basically the lender hires the appraiser to come out and do an assessment of the property, evaluate the market, and basically lets the lender know like, hey, if this buyer defaults on this loan, you'd be able to resell it. If you foreclosed and resold it, you'd be able to get your money back. So that's really what an appraiser is doing. The second thing that they're doing is like, it's helping you make sure you don't overpay for the property. On average, an appraisal is around $500, and it will be paid usually at the time that your contract has been accepted and you're doing your formal loan application with the lender. They'll ask you for a credit card information. So sometimes it's paid then, sometimes it'll be just added to the settlement statement at the end of the process. So, and that's lender specific. So it just depends on the lender that you're working with. In today's market, some people are waiving the appraisal contingency, which basically says like, yes, I'm putting in an offer for $675,000. If it doesn't appraise, if it appraises at $650,000, I get that I have to bring an extra $25,000 to the table. Don't do this without talking to your lender and your agent first to make sure that it makes sense for you. If you happen to be sitting on like a boatload of cash and this is the exact school district that you have to be in and it's 2 doors down from your best friend's house, and you've been looking at this house for 30 years in love with it, and so you have to have this house, it doesn't matter how much it costs you to win, then great. And I have clients that have done that. I mean, I've had clients that have waived every single inspection just to be able to be in this house in Old Town or in this house in like some neighborhood in DC. But they also were sitting on a couple $100,000 worth of cash. So not everybody can do that. So just know that that's an option, but you have to really know what you're doing. This also puts your earnest money deposit on the line if you're not able to perform. If you're confident it's going to appraise at $675,000 and then it doesn't, like, what are you going to do? Are you going to walk away from your $50,000 earnest money, or are you going to figure out a way to come up with another $25,000 to get to closing? So those are the things you need to consider. Loan approval. Loan approval typically happens around 2 to 3 weeks in the process with most lenders. If you're working with the big bucks like a Bank of America, or you go someplace like USAA, it may be more like 30 to 40 days. And that's the biggest reason why we kind of suggest that you don't go that route when you're looking to purchase, because sellers don't want to wait that long. They want to get to the closing table. But this is when it's time to celebrate, because usually it's the last contingency that you have. It's the last thing that, you know, you're like, oh, come on, come on, come on. And it also means that they're going to stop asking you for so many pieces of documentation, because that is the one thing that most of my clients complain about, is that they're like, oh my God, I'm like, documents and documents and more documents. They're going to know every single thing about you when they're done. So just kind of know that that's the state that the real lending industry is in. After 2008, there were a lot of laws that were put in place. So they have to, there's a lot of in the process to get through the loan, to get to the loan approval. And then there's going to be the closing day, whenever you're going to actually go to the title company, sign all the paperwork, and it's going to become yours. So you'll need to bring like an official ID, like a driver's license, personal identification. Also, you're going to need to bring like whatever your cash to close is, so your down payment plus your closing costs. And you'll know about that usually at least 3 business days in advance. You'll have a good estimate at the very beginning. Usually the estimate is going to be high. So when you get to the closing table, it's usually a little less than what they estimated at the very beginning of the process. So you'll either need to bring a cashier's check or wire the funds in advance. And most title companies these days want a wire. But I'm also putting in here just a wire fraud warning. Always call and get a verbal confirmation of the wire instructions by placing an outbound call to a verified number of the title company. The real estate industry was an easy target for several years. People would hack into real estate agents or loan officers' email and just monitor it for months and months until they find a client who is making a big down payment. And right before closing, they send an email that looks like it's coming from the loan officer or from the agent saying, hey, the title company just reached out. They just changed financial institutions and they sent me new wire instructions. Here's the wire instructions for where you need to send your down payment. And people are going to their bank and placing a wire and wiring money to some other place, right? And because they are in fact initiating this wire and they're the ones who initiated it, there's no recourse. It wasn't stolen identity. The bank initiated the wire instructions that they requested. So like 2 or 3 years ago, a couple in DC lost $1 million by wiring it. It was, they had sold a house, they were wiring it to a new title company for the purchase of their house, except it didn't go to the title company. So just keep that in mind whenever you're placing wires. And then you're going to have an entire team of people working for you, and it is people working for you on your behalf. Real estate agent is looking at your goals, making sure that you get the home that you're looking for under the terms that you're looking for. The loan officer that you're working with, you can talk to them and tell them all of your like scenarios and things like that. They're putting together a package to present you to the underwriter. So they'll say like, well, we'll include that, we won't include this, you know, so you don't have to hide any information from them or from your real estate agent. You're going to have a title company. There'll be an attorney that's working at the title company that is facilitating the transaction. If you choose to get a home warranty for your home, that's a company that you'll have as a partner, and basically it's kind of gives you the hybrid scenario of being a renter and a homeowner. You can call the home warranty company and because your refrigerator stopped working, and they'll come out and fix it for a flat service fee. So usually home warranty contracts are a year and they run around $600. And so then if your heat's not coming on or your AC's not working or your washing machine is not draining water, you call the home warranty company and they'll come out, and for their $75 service fee, they fix it. So it gives you an opportunity to save up some money and start to get that emergency fund replenished after making such a large purchase. And then of course you have a financial counselor, Jessica, who can help you kind of rebalance all of your finances after you have made the purchase so that you can continue to flourish. And then there are other professionals you may want to consult too that won't be directly tied to the transaction, but a CPA, you may want to look at an estate attorney, making sure you have an estate plan in place. Now you have assets and what needs to happen to those. A financial advisor who could maybe, now that you have this large real estate asset, maybe you need to do some like shuffling of your investments, things like that. So definitely have like an entire team around you that's giving you quality information from an expert. Our uncles and our aunts and our cousins and Google are all great, but they can only go so far. So, and then, you know, the goal is always basically get you the best price and terms, find the house of your dreams, the fewest hassles, and, you know, in the time frame that you're looking for. And so that's what the team is out here to do for you. And it really does take an entire team to go through the whole transaction. So I know I've been talking a lot. This is my contact information. So if anybody wants to reach out to me, you can call or text me 202-431-7210. You can also shoot over a quick email, info@paulaflagg.com. I'd love to talk about this stuff. I'd love to answer people's questions. I don't know if you could tell, but I don't think that I have had like one breath since we started because I'm just so excited. I kind of want to dance for you guys. But like, feel free to reach out to me always. And then Jessica, you want to like share your information?
Well, I want you guys to feel free to reach out for Paula for all things real estate, because yes, I am a financial counselor and coach, and I can certainly help you go through your finances to get ready for this transaction. But once you start getting into that nitty gritty, into that world, Paula is definitely the expert. But if you have, you know, questions on anything else financial related, you can certainly connect with me on my website, jessicamedinallc.com. You can subscribe to my weekly newsletter where you'll get personal finance tips and updates on trainings like this that I give on a fairly regular basis with the library and with other organizations. So you can make sure you're staying on top of all of your personal finance issues. But I also wanted to open it up for questions. We do have some time. Paula did an excellent job of blazing through all of the material before our time cut off. And I wanted to make sure that before we close out, we make sure that if anybody had any questions that popped up during the presentation, that we get those answered. So Allison, I think people can unmute themselves if they want to, or you can pop something in the chat. I didn't have any questions come through the chat during the presentation, so.
I did have one person ask, Paula, if you were associated with the Old Town Alexandria office of Keller Williams.
So I actually, I am based out of the Capitol Hill office, and I live in Virginia. So I've lived in Alexandria most of my time in this area, and about 3 months ago, I moved to Lorton. So still in the Virginia area, but I joined that office basically for the leadership and the people that I get to learn from on a daily basis. And I know a lot of people in the Old Town office, but I do work out of the Capitol Hill office.
Oh, we do have a question. Paula, are you working with many laid off hopeful homeowners right now? We have somebody who was laid off in April and would really be interested in buying, but may need to be postponing it. So have you had any experience over the past few months working with potential homeowners who have been laid off?
Great question. So one of the things that I would say is it depends on the financial strategy, right? So if somebody has been laid off, but they have an investment account that they're going to be using to leverage for the purchase, or cash, or maybe they had sold some investments, then it becomes less of an issue. If you need to qualify for a mortgage, then you may need to have a new job in place to be able to get your loan approval. But I will work with those people even if they're in between jobs to make sure that we're preparing them, right? So we'll want to have a conversation with them, find out what they need to do. Maybe there's some things that they need to take advantage of right now to keep from ruining their credit, so that by the time they get their new job, it's not like, oh, well, now you have these lates on your credit and we have to wait so many more months. So it really, in that meantime, we may want to just be having a conversation to make sure we keep everything on track, so that as soon as you get a new job, or as soon as you get that offer letter, like, you don't even have to be back at the job yet. If you have an offer letter, we can get you a pre-approval as long as you're starting it by the day we close. Should be good.
Yeah, and reaching out to someone like Paula in order to be connected to a great mortgage lender who has experience working with, you know, people in those types of situations,
Mm-hmm.
that's where it's a really great resource, right? Because you want somebody who is creative, you want somebody who's proactive, and you definitely want somebody who's going to be able to tell you, okay, these are the things that are going to be most important for your mortgage application, which may not be the same things that are really important for improving your credit score, you know,
Yes.
or for some other type of, you know, credit bearing process. And so working with professionals who really are inside this industry day in and day out and know how to get things approved, that's where you get a lot of the benefit of, you know, bringing somebody onto your team early.
Yeah, and you brought up something that kind of triggered a thought for me. So I had a client I was recently working with who had accumulated about $10,000 in cash and you know, his like safe in his closet. And when he was talking to his loan officer to go through the pre-approval process, he was like, and I got this $10,000, you know, and the loan officer was like, do not deposit it. Whatever you do not deposit it into your bank account, because at the moment that you do, you have to like document where it came from, right? Because it could be somebody is paying you to get you to do this transaction. It could be that it's a loan from somebody that you have to pay back. It just opens up this huge can of worms. And he would have probably had to wait 60 days to have 2 bank statements that didn't show that $10,000 deposit. He could qualify without it. So the loan officer was like, look, you can use it to pay your down payment, everything at the end of the process, but like to get through the approval process, do not deposit it. So like you said, it's like some things that are great for you from just the financial perspective aren't necessarily the things you want to be doing from a mortgage approval perspective. Mm-hmm. You know, like everybody, like being debt free is great. Being debt free is great, but if you were to pay off all your credit cards and have no cash in the bank, like you can't pay your closing costs. And they don't look at what your total debt is on your credit cards. They look at your monthly payment. So you may owe $5,000 and your payment's $200. Like they don't care about the $5,000, they care about the $200. So.
Oh, we had some more questions come in.
Yay!
What about taking out a mortgage loan in one state and purchasing a house in another state? And relatedly, what would be the process in terms of getting a loan to buy a home internationally?
Okay. So I have worked with international buyers in the United States. So people who don't have a United States credit bureau account, you know, a lot of times their money is in overseas accounts, Swiss bank accounts, like literally. And there are banks who work with international buyers. So typically they need to put more money down. It's a lot of times it'll be 25% is the minimum that they can put down. And then what they'll do is they go through the process of creating like an international credit report. And usually they'll use the bank statements from the international banks, and they have someone who interprets the bank statements and fills out and creates an international credit report for them. So I'm not sure about purchases in other countries though, but that, you know, I can get you in touch with people because Keller Williams is a global brokerage now. So we have people in over 50 countries. So depending on where you want to buy a home, I may know somebody. I can actually connect you.
I have lots of people who ask me about retiring in Europe. So
my business coach that I meet with every single week opened Keller Williams UK. in London. She moved to London and opened Keller Williams UK. So I can definitely help you there. And then in terms of like taking out a mortgage in any state. So the loan officer that you work with has to be licensed in the state that you're purchasing the property, but that's really the only restriction. Just like I have to be licensed in Virginia to sell homes in Virginia, and the loan officers that I work with have to be licensed in Virginia to do the loans. So that is really the only restriction, you know. So if you're working with a lender who's only licensed in Virginia, they're not going to be able to help you with a loan in Maryland. But you could live in Virginia and buy a home in Maryland. You could live in Virginia and buy a home in California. One of my clients just, she bought her house like 2 years ago. She just bought her parents' house in Florida. So I put her in touch with a loan officer and a title company in Florida, and they did all the paperwork, and she was able to purchase their house. So that they were COVID related, they were having some financial issues. So she bought the house, and now her parents are her tenants. So, and that all happened. She lives here in Virginia, but she bought the house in Florida.
Is it typical in the DC metro area that loan officers are licensed in all 3 jurisdictions, or is it really, oh no, I'm a Virginia loan officer, I'm a Maryland loan officer, oh you're across my board, you're across my state line, I can't help you?
So when they're working with like the correspondent mortgage companies like that I mentioned, First Home Mortgage, George Mason Mortgage, Movement Mortgage, like those kind of companies, they're usually licensed in all 3 jurisdictions. There are smaller, like say brokerages and things of that nature. They may only be licensed in 1 jurisdiction. So it's important, if you don't know exactly where you're going to end up, if you're like, I would love to live in DC, but it's expensive, and so I may have to go to Virginia to get what I want, then that's a question that you need to ask. I mean, most real estate agents are not licensed in all 3. So that has actually helped me service some of my clients, you know, because they know when they're coming, especially people who are relocating from another area, right? They don't know the difference between Virginia, Maryland, DC when they get here. They don't know where they want to be. And I actually get a lot of referrals from the agents in my office who are not licensed in Virginia and never have intentions of crossing the bridge into Virginia ever. And so as soon as one of their clients says Virginia, they just call me up and be like, hey, can you work with this client? So that's most of the loan officers at the medium to large size are licensed in all 3 jurisdictions.
Okay, and we have time for one more question.
I actually have one too, if there's time for 2.
Oh yeah, no, Allison, you okay?
It's not my question, but it did pop up in my chat.
Oh, okay. All right. So, Paula, you had mentioned that the big banks charge a higher % for a loan. Do you know why that is? Usually
it's overhead. So basically there is an interest rate that is set by like the Fed, right? And Freddie Mac and Fannie Mae, they're the government organizations that are buying these mortgage on the back end, right? And so they come up and they say like, here's our mortgage rate. And their rate may be 2.25, but then the lender has to make some money on the transaction. And so they look at like their overhead expenses, they look at the profit that they want to make, and then they add a little bit to it. So the government agency is saying 2.25, and then they say, okay, well, in order for us to cover our expenses and make some money, we need to charge 2.75. And mortgage companies are super lean because that's all they do. Highly specialized, they're cranking out mortgages at a really high rate with great customer service. So they don't have to have as many administrative people. They don't have to have as many people on the phone. So they're not in as big of a building, because a lot of those loan officers have like their own office in their home that they're working from most of the time. So it's just the overhead, and these companies can do it better. So.
All right, Allison, we have time for your question.
Okay, so this question is, are there any parts of the region that are more first-time buyer friendly than others, or is it all kind of a wash with the competitive market?
So I would say it really depends on your price point versus whether you're a first-time home buyer or not. You know, so sometimes I have first-time home buyers who are buying $800,000 houses because they've been saving longer, or there's two people buying versus like maybe it's a single person and they've only been out in the workforce for a couple of years, right? So they haven't saved as much, and so they may be looking for the $250,000 condo, you know? So it, I wouldn't say necessarily that there's areas that are more conducive to first-time home buyers than others, but it just depends on your price point.
And then she's saying lower price point.
And say that again.
In this case, she's saying lower price point.
So I think that it really just, there are certain condo communities that are in the lower price point where you can get like a really great place in the $200,000 to $300,000 price range. Those are great to get you in the door. Another option is if that's not what you really feel comfortable paying on a monthly basis, but you could qualify for a larger mortgage. What I've seen people do is go from buying like a condo or 1-bedroom condo, they may be able to bump it up to a 2 or 3 bedroom townhouse if they're willing to have roommates or something along those lines that could allow you to replenish your funds as well, and get you some income coming in. So there's lots of options for first-time home buyers. In Virginia specifically, we have, it's called VHDA. I think they just rebranded themselves to Virginia Housing, but basically it's 100% financing. You can get help with closing costs. You can get help with the down payment. They have what's called a mortgage credit certificate, where 20% of your interest that you're paying every year gets given back to you as a credit, a dollar for dollar credit on your taxes, and then the other 80% is still tax deductible. But lots of great options for first-time home buyers in the area. And really the key is making sure all the terms are solid on an offer. So first-time home buyer can win against somebody, an investor, or somebody who is buying their 5th house, if they are able to work with an agent who is finding out what's important to the seller and structuring the offer in a way that is appealing to the seller.
All right. I think that's all the questions, but we have one more slide that is Allison's. Excellent.
Yes, so I'd like to give a little update about what's going on at the library at the end of each of these programs. So we do have lots of other virtual programs going on all the time. As Jessica mentioned, she does a lot of programs with us, and there's programs on all kinds of different topics. So if you visit our website /virtual, it'll have a list of everything happening online for the library. Also, you can access a lot of materials online if you're not comfortable coming into the library yet. Digital books, digital music, digital magazines, if you visit our website /digital-collection. If you are interested in being added to our financial programs email list, please email reflib@alexlibraryva.org, and we can add you to that list and let you know every month the financial programs that we'll be hosting. And the library is currently open at reduced hours. We are also still offering curbside service. So if you're comfortable coming in, please visit our website. We have some information about the new hours and the new requirements. And if you're not comfortable coming in, you can set up a curbside appointment to pick up materials. And I would just like to thank everyone for coming tonight, and to thank Paula and Jessica for presenting, as always, a lovely, wonderful program. We do have, looks like a couple thank yous in the chat as well from our participants, so thank you.
Thank you, Allison. And a quick reminder, I've already gotten some requests for the slides, but if you want to pop quickly, if you want to pop your email in the chat to me, or email Allison at reflib@alexlibraryva.org to get your copy of the slides from tonight's presentation.
Thank you, everybody.
Thanks, everyone.